I wanted now to point out a real example of what can happen when people follow investment advice from somebody who has potential conflict of interest. This is Frederic Mishkin, who was a Federal Reserve governor, and this is actually a video clip from the documentary Inside Job. Now, if anybody on the call has not seen this, I very much recommend that you take a look at this documentary. It came out 1 or 2 years ago. It basically shows exactly from step one all the way through the crash, what was going on, and how investors were being affected and what the investment bankers were doing behind the scenes and so forth. This documentary featured some interviews with very prominent individuals, including Frederic Mishkin, and he was a professor at Columbia, and he decided to do an interview with the producers of this documentary. The topic of the discussion with Frederic Mishkin was a report that he co-authored called Financial Stability in Iceland. He wrote it in conjunction with the Icelandic Chamber of Commerce, and he published this report in May 2006. He said that the economy has already adjusted to financial liberalization, which was already completed a long time ago, while prudential regulation and supervision is generally quite strong. So he just said Iceland's doing great, which in turn would attract investors, would attract new capital to flow into the country, and so forth. So what's the problem? Well, first of all, Mishkin failed to mention in this report that he was compensated around $124,000 by the Icelandic Chamber of Commerce to actually write this report. And what's even better, and this is, I really love this because every once in a while people really surprise me. Of course, shortly after this report was written, about 2 years later, Iceland fell apart. All the banks were having a lot of trouble, experiencing the financial crisis, and basically total collapse. So what this guy did is now he had on his resume, he produced a report that said financial stability in Iceland, and now Iceland has all but imploded. What to do? Are you going to leave it off of your resume? No, you can't really do that. So what this guy did was he titled the report, as it appears on his resume, Financial Instability in Iceland. Funny how he did that. So he went ahead and said, all right, well, I can't put the real title on there. It won't make me look good, so I'm just going to put instability. All right? He goes on to say, it turns out that the prudential regulation and supervision was not strong in Iceland. Oops. Sorry, guys. And, of course, this begs the question, well, how did you determine that Iceland was doing so well? The reason that he reached these conclusions was that he had faith in the central bank. That's something new. And he followed generally held views at the time. And they asked him, what data did you actually look at? What studies did you conduct? And the guy didn't have an answer. You'd think, okay, these guys basically helped cause the financial crisis. They watched it happen. They did nothing about it. At least you can stick around to fix the problem, right? At least you can stay there and use your expertise, whatever that might be, to try to fix the problem and get the country back on track. And what did this guy do? As soon as everything started falling apart, Frederic Mishkin quit his position at the Federal Reserve and went back to focus on his teaching duties at Columbia. When they asked him in Inside Job why he left, he said, well, I had a textbook to write. Which, I don't know how to respond to that. This guy, I mean, the gall is amazing. You receive compensation, you don't disclose it, and then you basically leave and say, oh, you guys are on your own. Thanks for having me around. Appreciate it. I'll talk to you later. Now, the director of Inside Job said that Professor Mishkin suggests that his 2006 report on Iceland identified various systemic risks, and the majority of bad behavior in Iceland's financial system occurred afterwards, and that Iceland's real risks were unknowable. At the time he wrote this report, Iceland's banking system had already borrowed $50 billion, more than 4 times Iceland's gross domestic product. And in the preceding 5 years, Iceland's Financial Supervisory Authority had a total of 40 employees, including clerical staff, to monitor all of the country's financial companies and markets. So 40 employees, including clerical staff, for the entire country. Professor Mishkin's report does not mention this. Because I'm sure when he stepped out of the plane, asked how everything was going, everybody said, it's going peachy, thanks for asking. And during the bubble, about a third of these regulators departed to work for the banks. So you have to watch out who's giving you investment recommendations and who's making predictions, especially. Because if I'm an investment bank and I want to make a killing in the market, One way is to choose prudent investments and to put the time in, the effort, and the risk to make sure that you choose only the best investments and reach a certain level of return. But what a lot of these guys are doing is they're simply taking a position and then having their media people go out and spread the message, whatever the message may be, to make the position work for them. So it becomes sort of self-fulfilling that a company needs a stock to drop to get their people to say that the company is garbage, and the price does indeed drop because everybody else in the market starts selling. As soon as somebody from Goldman puts out a report that the BRIC countries are suffering, people are going to unload. They get nervous. They don't want to see any downside. This can work out very well for a company like Goldman, okay? Especially since a lot of these investment banks had been trading on their proprietary accounts as well as on behalf of their clients. So what a proprietary account is essentially the investment bank trading for itself. It can trade against their clients. It wasn't really a rule against that, and many of these banks did. Goldman came out and said publicly at those hearings that, yeah, you know, we bet against the securities we were selling to clients. What's the problem? Lloyd Blankfein sat there and said, well, no, it's not a conflict of interest. We're market makers, and we expose clients to certain levels of risk. Yeah, and then you bet against them. So you sell a security knowing that it's going to fail. So that's just a word of caution.